Welcome to Trading Lounge and the US indices for Thursday, May 12th. I just want to have a look at a few counts. So this is one of the counts we had going on. Yeah, I mean, it seems sort of okay in terms of having 1 and 2 and 1 and 2 here and coming down, but I don't think that's the case. And then we were looking at, where are we here? This particular count here. I mean, they're all bearish. I mean, I know they're bearish because of the stocks that we've been looking at, you know. This is the other one here that I kind of like because it counts as 1, 2, 3, 4, 5 down to here. And then an ABC, and then pulling down further. So it'll take us down much lower here, quite deep. Obviously this trend line here may sort of play out to a point. I'm not quite sure, but we'll just leave that there. There was another count that's floating around that has been pointed out to me a few times. So I just want to have a look at that. I put it up here. So I think I put it here yesterday or the day before or something. So it's quite a good count in that we have wave 3 here with an A wave here, B wave here, and then 1 and 2 and 3, an A and a B and a C for 4 here, and then down for 5. Well, we'll have to move wave 5 down to here now for that. So is that possible? Well, look, I think it's a good count. The only problem that I find with it is that we've got 1, 2, 3, 4, 5 to this point. So then it makes it a little bit difficult to give like as an A and a B and a C here as an expanded flat. It makes it a bit difficult because there's no 5 waves in here. So that means you need to look at a triangle A, B, C, D and E. So that means the wave 4 needs to sit in over here. And that doesn't sit very well either at that particular point. So it's not the only reason I haven't played with this particular count. The other reason is that, you know, as I mentioned in the stocks video, you can simply see like Tesla and Amazon and that, they've got a lot further to go down. So like if they're going down, then we, you know, this is all going down as well. So coming back to this chart here and looking at this moving down lower, yeah, I mean, it's because if we got 5 waves to this point here, we can either call it wave 1 here and wave 2 here, and then wave 3 would be, you know, quite long, and 4 and 5, which would take us probably too deep and would be out of the way of timing for look, because I've got to bring in all the big tech stocks and the banking sector and all come in and peg a low in. That's what I'm trying to do. So I know that I've been a little bit out, but it's sort of starting to gel quite nicely in together. So yeah, so coming back, can we look at this as an A and a B and a C and finished here as wave 4 or whatever here? Possibly. Let's see if we go up from that point. No, it's not the first time I've been wrong about something, you know. Anyway, let's just cruise in. I've just got to kind of remember what charts I've been looking at here. So we'll just start with this one, 5K. So, okay, so yeah, we've got 1, 2, 3, 4, 5 down to here. So we can look at that. We can look at this here. I mean, you know, if we go into a bigger bear market, well, then we will need to look at this like this, you know, as wave 2 there. So yeah, so I've been looking at it as wave 1 and 2, and then 1 and 2, then 1 and 2 in here. We can also count 5 waves down here, so I've got wave 2 sitting there for that. So we could also bring this wave 1 down to this point. That works as 1, 2, 3, 4, 5 down to here, because we do need to sort of move down further, you know, and the timing of everything is just group 1 and group 2 and at 4,000 there. So yeah, so it is possible to put this wave 1 here and have wave 2 there, as we've had before there, I think, by that. And yeah, then we start coming down here. I mean, the main point here, I guess, is that the market's come down, and you know, it hasn't really bounced off this very high, has it, off this level? I mean, it's a big number, and there was no buyers that really came in for that. So it's like it's fallen in the mud, really. and it looks like there might be a chance for recovery, but I don't think so. And what I mean by recovery is finding the 4,000 as the support. I don't think that's going to occur. I think we're just going to keep on edging down. So really, this is the correction at the level. It's just really, hugged the level and now leaving that space. But in the bigger picture, we've got group 1 above and group 2 below, so we could get stronger bounces retesting it from here. But I don't think so. If we look at this as 1 and 2 and 1 and 2, or even 1 and 2 here, then whichever way you want to look at it, I'll be tracking both of them until I get it sorted out. But it's not. It should. What we're seeing here, we should see at group 2 here, 65, 72, and 8 here. So it's what we should see. But we will be in a series of wave, 3s and 4s at that point. It's probably going to be down further than this. Yeah, anyway, it's definitely something of this nature, and this is what we're seeing in the stock market at this point, So we can follow that pathway down. Don't really need that. We'll just leave this trend in here to see how it bounces around and at what price points and so on. Alrighty, we'll just go in a bit further, and this is 2,000 ticks. So this is one way we've had it here as well. So with 1 here and ABC for 2, and then down for 1 here and back for 2 over to here on this one, and then 1 and 2 here. But I don't like that. The reason I don't like it, this wave 2 here is really quite big compared to wave 1. So I don't like that. And then we've also got wave 1 here and 2 here. So yeah, it's not sort of panning out the way that I sort of want it. So I think on this one we've got more of a okay, so it's just 1 2 3 4 5 A and B, or 1 and 2 there. I mean, I don't like to think of it as 2. I don't think we need these trades here because we're really working them on the tick chart, so it's okay. So this one here puts this one here as 1 and 2 here, and then we still need this down for, there's a 1 and 2. We'll take a closer look at this as 1 and 2 here, and 1 2 3 4 5 here. So that could be a 1 and 2 coming back there as well. It could be down for 1, back for 2, down for 1, back for 2, down for 1, back for 2, and cascade down. Or we could look at this as 1 and 2 here, and I'll go and have a closer look at it on the 100 ticks. Okay, so this is a bit of a mess here, but let's make the best of it. So in this case, we've got this as 1 and 2 here, and 3 and 4 and 5 here for 1. So that makes, just to point out, that makes wave 3 here coming down. So if we take that to here, that's just the 100 there, and bring that down to there. So we can expect this wave 3 to give you a bit of an idea, at least to get to that point. It'll probably be lower than that, because normally it's wave 1 plus another 61.8%, but I'll just take it steady as she goes. So that's group 1. That's all good. So yeah, in this case it's a slightly better fit across the medium level here. So 3 4 5 here for 1, ABC for 2, then 1 and 2 here, and then I'm looking at this as 1 and 2, 1 and 2, 5 waves here, so 1 and 3 4 and 5 to come down, and that will be 3 and 4 and then 5 here. So the important thing here is we're basically, can I put that over to there, coming down here for wave 1 and then going back for an ABC for wave 2. If it bounces off the 3900, then the 61.8% is roughly back at the 4000. But I think we need to, I'll leave that for you. We need to sell the retest. So whatever it takes, that's what you need to do. If it's an ABC pattern, you can short under the B wave here. You can also draw a line through here somewhere. Sometimes you can draw the line through here. It just depends on how deep the B wave is, you know, like sort of over here, like this here, you know. It can be helpful, you know. You just got to see what it is at the time, you know. So yeah, on the stop, I brought the stop down from here. I'm just bringing it down to this area over here. That shouldn't be breached at that point. We've got a bit of exposure down here with all of this, but I'm okay with all of that. And we just want to keep on adding. So if at any time the 3900 becomes the retested resistance with a classic trading levels pattern to the downside, then you'll want to be selling that as well. So if that's the 3900, we get the first low, then you work up from, put a trigger under that, under here, wherever it takes, you know. And make sure that we get on the short side there, because if you think about it, if this is wave 2 here, and it doesn't really matter if it is or not, because if it is blue wave 2, and we're basically heading into third waves here. So I've been, you know, this is what we've done with stocks. When you have a look at the stock video, we could point out that they're all ones and twos coming here, and we've just been building into them, you know, over trading really. But you know, you don't get opportunities like this much in the markets, you know. So yeah, this is the time to hit it. Don't go blowing your account up, you know, and then turn around and blaming me. I mean, like I mentioned before, I'm a bit of a scaredy cat, and I keep positions, you know, really smaller than they should be, because yeah, I've lost enough accounts, you know. Everything could possibly happen to a trader has happened to me, so, and it still doesn't mean I'm that good either, you know. I got an email from a client today, or someone on a trial, saying, or I don't believe that you can time the market very well, Peter. I said, oh yeah, fair enough, okay. Good luck. You know, because it is tricky business, you know, but we are getting through it here. And yeah, and what you can see, I think the important thing here is not really so much the count, it's just being able to see that this correction here is now going to be, it was the support, this whole area, but now it's going to be the resistance, and it's dropped below these here. And sure, it might go back and test it, but that's it. If you keep your stop above the level here somewhere, give it a bit of good space. I mean, because if we take this high here roughly down to the 39, you can adjust it. You can see that the 61 is here. Sure, it might go to the 78.6 or something, you know, there might be a news flash or something or other, but you know, so just be careful. It may not go back up here, and it may just continue to cascade down. So you want the 39 there. There's definitely going to be a bounce off the 38, because it's the thing of it's still part of this number here. So if there's going to be a bounce, it's going to be here. So don't go about shorting in here. We'll short the bounce at this point, and then we'll short under it. So you've got to get it close to 39, you know. Anything under the 38.50 there, you're shorting it under there, you have to take it out before you get to the 800 at that point, you know. And you'll have group 1 in here, 10, 20 and 30. And then 50, and then 80, and little group 2 in here. So you really want to, once the group 2 of this number here, which will be 3880, and then the 72, 872, and then 865 in here. When that 865 becomes the retested resistance, then you know that it's leaving the 900 and it's going down to the 850, which you'll get a classic trading levels pattern on this position here, and then it's going to drop down to this point. But there will be a bounce off 8 here. But we're going to stay out of the way of that. We'll see what the count looks like at that point. So I think that's all I've got to say about the S&P. So yeah, if there was going to be a low in place, like I mentioned on that 4-hour chart, it's going to be here, right? I know that folks had it here somewhere or here, but this is where it would really be if it was going. If there was going to be a low in place, that would be off the 3900. And then what you would look for if you want to be bullish, then you would really need the 4,000 as a support, and you would need a classic trading levels pattern at that point, because you're going to get something like this here where you'll have the arrival, some sort of reaction from that, profit taking and all the rest of it, value buyers coming in, value buyers running out, folding over, stops being taken out on this one, this, and so back over here is where you can build your long trade. So that's where we'd be if we were wrong. We'd need to be long back on this point here, but otherwise we're just to the downside. So I've spent a bit of time on that. This is the NASDAQ here, and this is the 61.8% down here for that. Once again, you can count 5 waves down here, probably. So that would be the low at that point, if there was going to be a low in place there as an ABC pattern at that point. But that's not quite how we're counting it, I don't think. So onto the daily chart, we're counting it like this. The same as the S&P, the same as the banking sector, the XFL, and you know, because originally I've got this whole bearish thing from, you know, the Bank of America. I mean, other banks are there as well, of course, but and Morgan's, and that the count on that was all really quite simple, you know. So, you know, this leg could match this leg, but this leg here is really sort of what we're sort of looking at here to match this leg over here for that. So yeah, but I'm still looking lower than that though, but there will be a bounce off the 11,500 for this. So 2k and 1k 100 there. So let's go and check on all of this. Need to get in more data. Okay, so this is just 2k tick, so picking up from wave B here, just counting 5 waves down like we did on the what's the name. So this is what it looks like. So we can look at this as wave 1 and 2 in this case, and then 1 and 2 here, and then 1 and 2. So we're building down. So we'll get some wave force across the, I mean, 11,500 doesn't seem really important. You think 11,000 is more important, or 12,000, and yes, they are important, but if you have a look at stocks at $11.50, you'll start to see how important it is. So yeah, that's sort of where we are really. So from wave B to wave C down here, we're just looking for 5 waves. So yeah, I'm starting to wonder what the catalyst will be in terms of news to push this up. You know, maybe Putin goes home with the tail between his legs, or he doesn't go home at all. Stand at the pearly gates and answer a few questions. Yeah, so that's sort of it there, but let's go and get a bit closer to this at 100. Just get some more. So a wave B's up there in this case. This case I'm looking at it as 1 and 2 here, and 1 and 2, so slightly different. It doesn't really matter at this point. It'll come out. As things unfold further, we'll get it, you know. So one of the important things here, if the low was going to be in place, it will be at the 11,800, and then the market would go back up, because you could probably look at this as 1, 2, 3, 4, 5 coming down here. So the folks that were looking for that, you know, that particular structure would look for it at this point. But for us, we've got a few positions here, and we've got this, brought the stop across. I think it was over here, so I brought it across here. We could bring it down a bit further. So yeah, and I was just counting this here. It's pretty simple. It's 1 and 2 and 3 and 4 and 5 for the third wave, fourth wave, fifth wave for third, fourth, fifth. So yeah, the bounce will come from the 8 here, and what I was thinking is that we need to short it. So up here, just track the bounce off the 11.8, how far it will come back. Not too sure. We always just start from the top and go down to the bottom. So if it's lower, then take it down to there. If it's there, you know, wherever it may be. And you see here that I've got it at the 61.8%, the 50%, and the 40% here, because we've got to get in at this point, you know. Now I could have this wrong, and the other way that this could play out, if this is 1 and 2, this could also be 1 and 2 here as well. So Thursday can bring a rally, so we could look at it coming into this space here, but that to me would just create another opportunity at this point, coming back into the 61.8% here. So that would be the other count, which makes sense too. And that would be in line with Thursday being, if you know the bullish weekly cycle, it would be that in reverse. So yeah, so this could, I'm not sure how that's finished off there. It's probably finished, but it'll just come higher than a fourth wave here, and then come down at that point. And if this is the case, then we won't get this here. What you'll be able to do then is bring this down to under the 12,000 at that point, or to 12.1 and 12. Okay. So yeah, so they're the two options here really for this. And yeah, so moving on to the Russell, we can look at this in different ways. We could also look at this in this. I'll just bring the ETF here. So here you can clearly see, if I label this here, it's just I think it needs to be this degree. So you could label it like this here. This is probably not the best third wave in that sort of case, but you'd have to label that the fourth. And then you would have the fifth wave down here as 1 and 2 and 3 and 4 and 5. So I think they had this one as that, but we have to come down here further for that. So wave 5. So that could be the low if you wanted to look at it like that. So if you want to tighten your shorts up and you think that you're bullish, well then that will be the play. So what you'll need to do is count 5 waves from that high here down to the low here. So when you do that, sometimes it's good just to go over to see where you are. Well, 170, that's going to be pretty strong. So when you come into things like big numbers like this, you'll find that the market can kind of skew the wave count and kind of pack it all in rather than pack it in or stretch it out and all those sorts of things. And if that's not the go, then the 68 under here would be the other level, 68, the part of group 2 there. And I'll leave that to you at that point. So that's how it can be counted to the downside, but I'm looking at it a bit differently here. So I'm looking at it as wave 1 and 2 here, and then down here I've been counting down through here. I don't think I could look, I mean I've been looking at 1 and 2 and then down for 3, 4 and then down for 5 here to make to make wave 3 here. But the trouble with that, the trouble with this, putting wave 3 here, it's sort of okay, but the problem with that is that it's in front of the other markets, you know. So for the other markets, wave 3 is still way down here for this. So I don't think it's the right move in this, but it's okay for the time being. We've got short, you know, at the end of the day, it's not it's not about the talk, it's about the walk, isn't it? So we've got these trades in here, and then we've got the stop. So we've protected a lot of those. You should have another one in here, and we're looking to get another one in here as well. So another way to look at this, if once the you see, like, so if there was going to be a low in place, like for that count that we just had a look at on the ETF, you could go 1, 2, 3, 4, and one more little tiny low in here. There'd be 1, 2, 3, 4, 5 in here, finishing off there, you know. So that would be the low at that point for that bullish count. So it's possible. So yeah, we'll see how we go. But otherwise, we'll look at this 1, 2, 3, 4, 5 down here, then an ABC. So if you can get it here, or you might be a bit scared to sell the retracement, because I'll just take that a tad lower, because I think there's, I don't know, I'm not sure, I'd have to pull that apart. But anyway, it will give us a ballpark sort of situation and take it down to the 32. So if you think that it's bearish, then this is where you would need to sell it from at that point. Then you don't have to overdo it, you know, because if a possible low is going to come in here and that's going to go up, well, why would you sell into the short into the bull trend, you know? So if that's the case, then you just short the wave B low here as an A and a B and a C and short that. But we do want to be, I'm going to remove this here. I mean, it will be that low, but I'm going to put it over here. So you want a classic trading levels pattern on that 72 there. That's, yeah. And this number here is a bit unusual, 1650. It's also a medium level and it carries the same weight as a medium level at 15 here. So we'll see how that plays out. Yeah, so anyway, we're tracking some different counts for these markets, but at the same time we're also I'm also considering other counts, but we're doing all the right things as far as I can see, even though we don't know the total count that well. Yeah, anyway, I know because of stocks we're going down, do you know? So if stocks are going down, well then, you know, these are going to go down. So if we, you know, look at Tesla, for example, just have a look at the daily chart here for a moment. It'll just give you an idea of what we're looking at here, you know, because see what the other bullish count was having the A wave, the B wave, 1, 2, 3, 4, 5 here for that. That's what we're looking at, you know, that's what some folks were thinking, and rightfully so, but it's just the tech stocks weren't displaying that. So yeah, this is kind of even overlapping that or close to it. So 1 and 2 and 1 and 2. So we're sort of deeper into the third wave here, which would put us pretty much in line where we need to be with the other markets, you know. So we'll probably see Tesla at 500 rather than 600 or 650. Probably break out of this trend channel and then move from that point. Anyway, yeah, so that's that. Alrighty, I'm going to leave it at that. Thanks for tuning in. Much appreciated. Cheers.